Welcome to the Dharma Insight Radio Show, where we navigate the world of personal finance. I'm Leslie, your host, and today's episode is a must listen for anyone considering investments. Of course, we're looking at 5 things to consider before buying a GRZ bond. Government bonds can be a strategic addition to a portfolio, and here are the key considerations. Is the insightful Ms. Mukonke, the CEO of Insight Partners Africa. Good morning, Mukonke. Welcome.
Good morning, Lee. How have you been?
Very, very well. How are you?
I'm great, fantastic. And good morning to us, those joining us on radio as well as online.
Now, before we delve into the consideration, could you explain why GRZ bonds are an attractive investment option and why we keep talking about them?
Thank you, Leslie. GRZ bonds are very attractive because they offer you a fixed income, one that is assured. So when you buy a bond from the government, you are simply lending money to the government, and in return, they'll be giving you what we call a coupon income, which is also called interest. And then every 6 months, you'll be getting this interest or coupon income. And then at the end of the tenure of the bond, so when the bond matures, so there's a period. So you invest for a period. You select what period you want to invest in. Let's say you selected to invest in a 2-year bond. At the end of the 2 years, you get back the money that you're giving the government. For instance, if you say, I want to give the government 100,000 kwacha for 2 years, throughout the 2-year period, every 6 months, you'll be getting the coupon income, less tax, and then at the end, you get back your 100,000 kwacha. So they are really, really attractive, especially now that it's actually easy for you to invest. A long time ago, only a few people had access to bonds, and it's knowledge that wasn't widely known. It was probably limited to commercial banks. Now it's actually pretty easy for you to invest in GRZ bonds. You simply need a CSD account, which you can open online by visiting the Bank of Zambia website. Once you have this CSD account, it is really as clicking buttons, you now become an investor. Easy it is now. So this is the right time for you to become an investor in GRZ bonds and reap the benefits. Yes.
First thing investors should understand before buying a GRZ bond.
So the very first thing you need to understand is the way GRZ bonds are structured. How are they? What are they? So simply, a GRZ bond is when you give money to the government. I gave an example of 100,000 kwacha. So if you say, I want to give 100,000 kwacha to the government for, let's say, 10 years, every 6 months, government will be giving you back the coupon income. At the moment, for a 10-year government bond, the coupon rate is around 20.9%. If you round it off, it will give us about 25%. So what this means is every 6 months, or rather every year, so that's per annum, year government will be giving you a coupon income of about 25% on a 10-year government bond. That's what it means. And you should divide that by 2. That will give you your biannual or every 6 month coupon income. And then at the end of the 10-year period, you get back your 100,000 kwacha. And so it's very important to understand this structure because it allows you to know, especially for those of us that want to be certain, it allows us to know how much I'll be getting. And it allows us to plan. For example, right now for me, I'm planning a ladder, Leslie, whereby the coupon incomes, which I've started getting, are able to pay for my household expenditure, perhaps shopping, groceries, rather than spending money that I'm earning, new money that I'm earning. I am actually spending the return on an investment that I've already made. So that's one decision I've made in terms of how I spend my coupon incomes. For you, you could decide to reinvest the coupon income. That will allow you to gain a compound interest on that investment. So we all have different objectives. And a consideration that I should also add is that you really need to be clear with why you are investing in this government bond. And that plays together with which kind of bonds you buy, the tenures. So really, really important. Like for me, I've already told you that for me, as I'm starting out on this journey, my motivation really is how can I cover my bills. I'll start adding on, how can I build, how can I buy this, I don't know, Ford, I love Ford. How can I buy the latest and all of that. So it goes with your goals. So the first consideration really is to understand the nature of bonds. They are fixed income, meaning that it is fixed. It will not change. That coupon rate will never change, no matter what happens to the market. And we can talk about other considerations later on. And then another addition to the first consideration is that there are two ways you can buy a bond. You can buy it from the primary market, directly from the issuer, in this case, Bank of Zambia, or you can buy a bond from the secondary market. So you can go to any bank over the counter and buy a bond in the secondary market, or even the LUCE, you can contact them in terms of bonds that are selling. The secondary market is simply, I'm buying a bond from somebody who already holds it and not direct from Bank of Zambia. So that's the first consideration. It's a mouthful, right?
Like someone did one for 10 years,
Uh-huh.
and maybe it's gone 2 or 3 years, and you buy it. So you
Yes.
spend the last 7 years.
Yeah, well done. We are getting there, Leslie. I love that. That's exactly the point. That's exactly the point, Leslie. So in the secondary market, you are buying a bond that has already been running. If you bought a 10-year bond, years ago, and now because of whatever circumstances you're in, you want to sell that bond. It has already served 3 years. It's a 10-year bond. Somebody is going to buy it from you on the secondary market. They are going to get the rest of the 7-year coupon incomes. And that is something we're actually even going to be considering during our training. How do we then determine the value of this bond? Are they going to make a return on investment? What's my yield? Those are things that we're going to talk about in the online training that I keep saying I'm really excited about, Leslie.
No, there's so much to learn, and
Yeah.
this is something we should be looking at.
Yeah.
Now, we're looking at the 5 considerations before buying a GRZ bond. So that consideration number 2.
Yes.
Risk is always a factor.
Mhm.
What should investors consider, regarding risk when it comes to GRZ bonds?
So risk is always a factor, Leslie. And before I actually speak about the risks that are unique to GRZ bonds, I would actually like to talk about a risk that we spoke about with Lina last week. It was really interesting. When you're investing in bonds, there are 2 ways of investing. You can either invest through your bankers. Last week, I gave an example of Indo-Zambia, and I didn't mean that you need to have an account with Indo-Zambia. It's any commercial bank in Zambia. As long as it's a kwacha-denominated bank account that you have with a commercial bank, you can transact through your commercial bank. You can buy bonds, so you can instruct your bank to buy bonds on your, or you can buy them yourself by opening a CSD account and you start buying the bonds. Now, a risk that I've identified, Leslie, that I'll start talking about quite frequently is that I've heard that there are people that are asking for your money to say, give me $1 million kwacha, I can invest for you. That is really unlikely to be the true case. What they would do is that they will have a bank account and they will be investing under their name, which you don't want. You want to have control over your investments. So a precaution that I'm trying to issue out this morning is that when you are investing in government bonds, there are 2 basic ways of investing. You don't need to give anybody your money to buy bonds for you, other than your bankers or yourself through the Bank of Zambia. And this is why we are doing this training, that you learn that this is actually something doable. And we'll talk about more details about the training later on. When it comes to risks that are particular or unique to GRZ bonds, there are quite a number. I'm going to mention a few, and I won't go into the details, but I'll talk about one, which is the interest rate risk, because this interest rate risk is very important to take note of now because of the change of the issuance method starting January. So starting January, we've got a new issuance method. Previously, we used to buy bonds at a discount, meaning that you bought it at a less price and then you got a higher value at maturity. Just I'm simplifying it. From January, you're buying bonds at par value, meaning that the amount you are giving Bank of Zambia or the amount you are paying is exactly what you're going to get at maturity. A long time we used to buy at a less price and would get a higher value. So now we are buying it at par, meaning that when you buy a bond from Bank of Zambia, the initial price is at par value. Exactly 100,000 will be deducted from your bank account. In 10 years, you get back exactly that 100,000. Now, if you want to sell your bond on the secondary market, you need to look at the movements in interest rates. When interest rates are moving up, your bond price, the bond that you're holding right now, the value is going to come down, because if interest rates are going up, it means that the newly issued bonds are much more valuable than what you are holding. And if the interest rates are coming down, your bond value is going up, because it means that your coupon income is higher than what is currently on offer. So this is what we like to say, the bonds have the value of the bond, or the price of the bond, as an inverse relationship with the coupon rates or the yields. So you need to be aware of the movements in interest rates if you want to sell your bond on the secondary market, because it affects the value of your bond, and it allows you to see whether you can sell your bond at a premium, which means a higher value than you bought your bond at. So now, Leslie, and I hope I'm not giving you too much information. That's why you need to join this workshop. That's why you need to attend this workshop. But let me just simplify it. Now, what it means is, if you bought a bond at 100,000 kwacha, you want to sell it on the secondary market, you could sell it at a higher price, more than 100,000 kwacha, a few years later. If interest rates have come down, it will be selling at a premium. If interest rates have gone up, you could actually sell it at less than 100,000, which is a discount. So that is what you need to consider if you want to sell the bonds on the secondary market. Now, I know a lot of us don't even think about the secondary market. Our interest is in, I buy the bond with BOZ, I keep it for whatever tenure, and then I get my coupon incomes and I get back my face value, which is really good. But it's also important to understand the secondary market and how it operates. And I'm going to spend some time during our online training on the 16th of May, when we cover bonds, in terms of how the secondary market operates, because you could actually reap a lot of profit by selling your bond on the secondary market if it's now selling at a premium, Leslie. So that's something you need to be aware of. So that's the risk that you face when interest rates are going up, is that the value of your bond will come down. So that's one risk. The other risk is liquidity. There are some bonds that are called benchmark bonds and non-benchmark bonds. What that simply means is, some bonds, when a bond is issued with a certain number, in future, the benchmark bonds can be reissued, meaning that Bank of Zambia can add more on the same bond. That provides liquidity on the market. So for those of us that are interested in liquidity, in terms of, I want to be able to sell my bond as quickly as possible, you want to be your interest is to ensure that you are investing in bonds that Bank of Zambia can reissue in future, so that they increase the volume of those bonds. Because if the volume is high, it means that a lot of investors are buying and selling that bond. So if your interest is in liquidity, the ability for you to be able to get your cash back, you need to look at whether it's a benchmark bond or non-benchmark bond. The other risk, Leslie, especially with our GRZ bonds in Zambia, is the callable bonds. They're bonds that, after saving a 60% of their life, BOZ can call them back. And BOZ is also trying to protect themselves. I spoke about interest rates going up and down. So where Bank of Zambia sees that interest rates have come down, they will call back these callable bonds and be able to reissue at a cheaper cost to them. So you also need to be aware of the callable, non-callable bonds, and as you are investing. So these are all factors, Leslie, that we're going to consider in our online training program next 2 weeks from now. It's on the 16th of May for bonds. For shares, it's on the 17th of May. Very, very interesting stuff. My goodness. Yeah.
Gone through all the 5 things to consider. I think the only thing we really haven't looked at is diversification and the portfolio.
Yeah.
So how is that? How is that factor that you have to consider as well? The issue of diversification, and how does it apply to GRZ bonds?
Thanks, Leslie. So diversification, specifically to bonds, is looking at different tenures, investing your money in different tenures. Something you need to understand is that the longer term bonds, though they attract high coupon rates, they're actually quite risky compared to the shorter term bonds. So if you want to build a bond portfolio that is diversified, you need to consider different tenure bonds, short-term as well as long-term bonds, so that you cover yourself in terms of risks in changes in inflation that later on affect interest rates, that later on affect the value of your bond. So consider having a portfolio that invests a bit in short-term bonds, a bit in long-term bonds. So that's how we can talk about diversification when it comes to specifically GRZ bonds. However, diversification is really diverse. Because you can also divest beyond bonds. You can also buy shares. That's why we're now talking about the LUSE. You can buy shares, perhaps invest in a company listed on the Lusaka Securities Exchange that is performing really well. And during the training, the second day, 17th May, we're actually going to look at how you analyze companies. Has this company's share price been rising? Has it been active? How do you make a decision to buy shares in certain companies that are listed on LUSE that are going to give you dividends, dividend-paying companies? Because dividend is not an assured income. A dividend is declared by the managers, directors of the company. So what you want is this company that I'm investing in the dividend declaring company or not? Because there are some companies that you give money to, buy shares, buy equity, and they've never declared dividends, and they've got a right to do that. Shares and the bonds are quite different. A bond is a debt. Government or even the corporates that issue corporate bonds must pay you. Shares, dividends are not guaranteed. The companies can say we're not going to pay you every year, and 10 years can pass without you ever getting a dividend. But if you know how to invest, buy the proper shares, you definitely be looking forward to buying dividend paying stocks. And so this is quite a lot, Leslie. I mean, 15 minutes is really, really little. So that's why we are doing this online training program on the 16th and 17th of May. For those that are interested, Inside Partners Africa is conducting an online training program called Learn About Stocks and Bonds with Confidence and not with confusion. So we want you to gain the confidence to be able to invest your money yourself. And it's on the 16th and 17th May this month. The deadline for payments and registration is 14th May. If you want to join us, you can contact me on 0977 44 56 04 or 977 44 56 04. And Leslie, before we conclude, there's just a comment from Mr. Thomas Banda online, who's asking, I managed to open a CST account. My account is active. I'm stuck. What do I do next? So what you do next is towards a few weeks before month end, once the bid window is open, you can invest as a non-competitive bidder or a competitive bidder. Now, Mr. Banda, this is a lot of information. That's why you need to join the training program, and everything is going to be covered. Yeah. Yeah.
Through to buying your first. It feels nice when you buy your first one.
Oh,
even just 1,000 kwacha.
do you
I
know?
know it's just okay, no, it's a long story short. But it still feels good that you've put in, you've done it, and all of a sudden you've realized you can do it.
Yeah.
Every time you have some extra money, you just do it. Every time you have some extra money, you do it. And if you start young, this is the secret. Start young.
Yeah. And do you know what's even the most interesting part, Leslie?
Yeah.
When you get that coupon income,
it feels good.
Then you're like, oh my God.
How small it is. So long as it has come into your money, it's like, wait a minute, this works. so there we go.
Yeah.
Thank you very much, Mukonti, for coming.
Thank you. It's always a pleasure being here, and I love doing this program. To the listeners in Zambia, thank you so much, everybody. Northwestern Province, that's my village, and everybody else across the country. Good morning.